Good morning, everyone. You are watching a live daily market outlook for Monday, 9th of April 2012, prepared by Windsor Brokers. The markets remain rather quiet during the Asian session as Easter Monday will be observed in most of the European countries, and no more significant movements in the market are seen until America's opening. However, the disappointing jobs data released last Friday pushed the dollar significantly lower in the hours of the late afternoon when the data were released, as the dollar hit 1 month low versus the yen, extending losses from last week's last Friday is actually lower than expected. The U.S. jobs. This might increase the hopes of Federal Reserves could yet adopt more monetary easing to support the economy. The disappointing data showed that U.S. Job growth slowed to 120,000 jobs last month compared to the approximately 200, slightly above 200,000 forecast, and this is the smallest increase since October. The disappointing figures also rekindled more market speculations that the Fed may eventually launch another bond buying program, and weighted on the dollar against the Japanese yen. The dollar fell across the board, and the US dollar index, the measure of the US dollar strength against the basket of major currencies, dipped to 79.73 low on Friday after a release of the data, regaining some ground afterwards during the Fridays and during the Asian session, and again regaining levels of 80. It's in case of further growth, that means of further gains of the dollar, as the dollar index remains in the short-term uptrend of its recent low at 78.66, posted at beginning of last week, 3rd of April. It might signal that this impact of weak U.S. jobs data was short-lived. We need to see the break of last week's peak at 80.10 in order to signal that this is the end of the short-term weakness caused by release of weaker than expected U.S. jobs data, and to resume the short-term uptrend of 78.66 level. From the other side, the euro is still under pressure in its a short-term downtrend after being capped at 133.80 zone, as quick recovery on Friday was capped around 131 zone, and it comes under pressure again, traveling lower again towards 130. 130.32 was seen during the Asian session as the low of the day for now. Dollar yen, as widely expected, remains under heavy pressure. Just a brief consolidation was seen during the Asian session after Friday's sharp fall on release of the US data, when the pair's price dipped from 82.54 down to 81.19, approaching our Fibonacci support level at 81.05, and keeping the downside in focus. The dollar Swiss is still in the recovery mode of recent lows at 90.00, with the 92 zone now offering good resistance, and the pair is currently in the sideways movement, but recovering ground after Friday's dip down to 91.58 after the data. The gold benefited of recent dollar's weakness, and it holds its steady short-term ascend recovery of 16.12. However, the wider picture remains still negative, and the yellow metal is in the downtrend of recent peak at 1790, posted at the end of February, and steady decline so far, dipped to 1612, just ahead of our next downside target at 1600. More of this we'll see in our technical part. 1 second there. We have one of our attendees cannot see the display. Give me a second, let me just check. It seems that problem might be from your side, as I can see the audience view is clear, and it's a screen, the start screen, which shows the daily market outlook. I don't know, try to do something. Obviously, that there is a failure from your side since no one else is complaining. Anyway, you can listen. If you cannot see it, you can listen. I'll try to give it as more as clear so you can get an idea what we are talking about. But it seems that the problem is from your side, as no one else complains, and I can see from my screen, control screen, that everything is running okay. Back to the business, no much data seen for today. As I mentioned, the holiday is observed in most of the European countries as Easter Monday. We might see some more action during America when it opens. However, also no releases expected except Canadian Business Outlook survey that is due at 14:30 GMT. But more significant is late afternoon, at late evening actually, at 23:15 GMT. Fed Chairman Ben Bernanke is going to have a speech, and this can give some more light in the markets, and usually his speeches are always closely watched, and we might see some stronger action. Based on the no data today and the holiday, I assume that we might not see some more significant movements in the market. However, we're going to take a look now in the technicals and see the latest movements in the markets and the expectations for the day of Monday. Starting with euro, quite significant is on the daily chart. Ichimoku studies showing that Ichimoku cloud base around 130.50 zone now offers quite good support. There were two brief dips down to 130.32, but so far unable to break lower. Might signal some further ranging around this zone. From the other side, Ichimoku studies are now pointing lower, and yet we need to see the firm break below this base in order to confirm further extension of the down move of 33.80 zone. On the hourly chart, studies are slightly improving, but current sideways movements shows rather neutral mode in the during the Asian session and this early morning, as 20 days exponential moving average currently offering good resistance and capping at around 130.70 zone, with MACD holding still below the midline in rather neutral mode. Also, the momentum is hovering around the its 100 line, and if in case of further strength, we need to see firm break above and lift in order to confirm. But on the upper side, 130.96 is the 55 days exponential moving average that is still pointing lower and offering next resistance ahead of Friday's high at 131.11. In this case, break above this level that also marks a 23.6% retracement of the latest down move from 133.80 down to 130.32. That was the low of last Friday, and overnight would signal some stronger recovery. On the 4-hour chart, the steep downtrend remains intact for now. Some studies started pointing higher, but still holding deep in their negative territory, with the RSI gaining momentum at this point, breaking above the 30 level and holding above its 7 days moving average. That might hint some recovery ahead, but to repeat, 131.11 is our next static barrier, along with the 131.06 4th of April low. We need to see this is the near-term break point. There is also the 20 days moving average on the 4-hour chart. We need to see a break above this point in order to avert immediate downside risk and allow for a stronger correction. On the daily, these studies are rather negative, as the pair broke below the main bull trend line drawn of 126.25 low of 2012. That was at 131.28, and looking for test of next very significant supports at 130.00 base of 14th of March 2012, and 129.73 16th of February 2012 low. This is basically like a double bottom pattern, and the break of this level would trigger more significant losses and signal end of the recovery of beginning of 2012, 129, 126.25 low that peaked at 134.85 at the end of February 2012. The as said, the negative, rather negative structure on the daily chart keeps the downside in focus for now. Cable is attempting to regain some ground after sharp losses of 160.61 recent high posted on 2nd of March. This is the high of year 2012 so far, when the significant losses were triggered and dipped down to 158.04. This was our initial target, previous low of 26th of March 2012 at 158.00. And just ahead of 157.69, another significant support. Also 157.95, the main bull trend line drawn of low of 152.33. This is the low of 2012. Significant at this point is a regain of 200 days moving average that pair has briefly lost on the reversal from 160.61 and dipped to 158 zone with sustained break above here. The positive is also Friday's closing above this level at 158.74 against 158.45, where the 200 days moving average currently standing. Might be good support for the further gain and to confirm the low bottom at 158.00 for a possible further attempt higher and the retest of 160.61 zone. So far the studies are still in the positive territory despite losing momentum during the past week, but positive signals that are seen here might be materialized in the further gains higher. We're going to take a look on the levels that we need to clear in order to sustain this gains. Initial dynamic barrier 158.77 on 4-hour chart, 20 days exponential moving average. Then last night's high at 158.92 and 158.97 is the 55 days exponential moving average ahead of last Thursday's high at 159.07. So basically clearance of 159 zone. There is also 38.2 Fibonacci retracement of the down move from 160.61 to 158.04. Clearance of 159 zone is required to signal a stronger recovery and avert downside risk at 158.0. Keep the 158 zone now for now intact in order to extend the recovery towards the next barriers. 159.33 is 50% retracement and the 61.8 it's 159.63, and these would be our next targets on the upside in case of clearance of 159 zone. On the downside 158.00, 157.69 offer initial supports, loss of which I have to mention again would again bring the weakness in play, as the recent down move hasn't given yet the clear signal of recovery. There is still risk of a lower top and possible further weakness. Loss of the main trend line at currently at 157.90 zone and the 157.69 low of 22nd of March would be good signals for further weakness of the British pound against the US dollar, and the next significant levels are seen at 157.00, where it's 90 days simple moving average shown on the daily chart. Dollar yen remains under heavy pressure. That was accelerated on Friday's release of NFP data when we had a sharp fall from 82.54 that dipped down at 81.30. Further extension lower was seen overnight to 81.19. Currently the pair is hovering around this zone, but negative studies see potential of further extension. Negative studies on the hourly as well as 4-hour chart holding deeply in the negative territory, keeping the downside in focus. Daily structure is also negative, and the loss of bullish momentum built up on the bounce from 76.00 is quite significant, and focus firmly on the downside even on the larger time frames. Our next static support 81.05, that was already approached on Friday's fall and overnight's weakness. 81.19 seen so far. 38.2 Fibonacci retracement of 76 to 84.17 ascent. This is our first target. The second one on the downside is 80.56 zone. It's the higher platform of beginning of March 2012, and just below this is the 55 days moving average at 80.29. These would be initial targets on the downside, while on the upside quite strong array of resistances. Initial one 82.22, the low of last week, 3rd of April. Above this it's 82.00. Just a second. 81.54, pardon, is the low of 3rd of April, and then 82 zone where is 20 days exponential moving average on 4-hour chart, and above this 82.36, 55 days one. Descending trend of recent highs at 84.17 and 84.08 has a series of lower highs that are now acting as resistance. 83.00 and 83.29, 83.38 are our basically key resistances on the way towards 84 zone, as the pair was within the range during the past week, and the range limit was at 82 zone that was broken on the 3rd of April. And on the upside, the recovery attempts were capped at 83.30 zone. Only break above these levels would refocus 84 and 84.17. So far, the pressure is quite heavy on the downside, and the most likely scenario would be further extension lower towards the levels previously mentioned of 81.05 and 80.55 and also 80.30. Dollar Swiss is currently within range of 91.58 and 92.15 in the sideways movement after a strong rally of 90.00 higher platform of 3rd of April 2012, peaked at 92.21 so far. This was the high of 5th of April 2012. Studies are rather neutral on the hourly. However, 4-hour chart holds studies in the positive territory, as 20 days exponential moving average currently at 91.64, just above last week's low at 91.58, keeps the underpins the current action and looks for a retest of zone at 92.15, 92.20. that were the peaks of last week, in order to resume recovery higher. On the daily chart, we need just to see the Fibonacci levels of this latest corrective rally, as it broke above 61.8% retracement. A brief break to 92.21 against the 92.06, where the Fibonacci level lies, and the current action approaching again this level with firm break above this and 92.21 to open next significant barrier at 92.50, the highs of 16th of March 2012. On the downside, the initial support at 91.50-60 zone, lows of last Friday, as well as 20 days moving average, and 91.40 again, low of 5th of April. Only break of these levels would significantly weaken the near-term structure and allow for deeper reversal. Until then, the still positive structure keeps the upside in focus, but we need to see the break above 92.20 to confirm. Brief look at gold, that is currently in the near-term uptrend following its recent dip to 16.12 on 4th of April, when it found a temporary support. Recovery has so far retraced close to 50% of initial down move from 16.82 high of 2nd of April. That bottomed at 16.12 on the 4th of April, with the 16.46 zone tested so far. There is a strong barrier at this point. 16.47 is the high of 4th of April 2012, and the 50% retracement. So basically, break above 1650 is required to resume the near-term recovery and open the way for a further retracement of the latest down move. However, on the gold's larger time frame, daily chart shows still quite negative structure of the yellow metal as it remains in the downtrend of 1790 high of 29th of February 2012, and loss of 200 days moving average at 1686 zone has so far extended the losses to 1612, just ahead of 1604 and 1600 low of 9th of January 2012, and 1600 is round figure and psychological support. The trend line currently at 1615 off trend line connecting lows at 1522 and 1612 is now holding the downside. On the upside also we have the descending trend line of 1790 currently standing at 1662, and basically break above 1650 and 1662 is required to signal pause in the recent strong downtrend and allow for a stronger recovery. On the upside, the key barriers are at 1683 and the 1700 zone, where is also 200 days moving average and the previous peak of 27th of March, and the only break of these levels would significantly damage the recent negative structure and open way for a further recovery. Studies on the daily chart remain in the negative territory, with the recent bounce in corrective as long as 1650-60 zone holds the upside. That was all for today. I wish you a nice day and very profitable trading. Good luck.